Nowadays, especially for the startups which are selling bundled items. So normally you will say, okay, now you maybe buy a subscription, lifetime subscription on a website, right? Lifetime subscription means you pay now $100 for lifetime access, but the company has to do a lifetime service, right? They have to maintain the website, they have to maintain the servers. So does it mean they earn 100 now already or not? No, right? They didn't earn 100 yet because they have to do the service in the future. So normally the companies now, especially with the new IFRS, there is a new accounting standard. Previously, before this, the company was recording $100 as a revenue today, but the cost will continue to come in the future years. So revenue is here, the expense is in the future years. So you're not matching the revenue and expense, correct? So the new accounting standard requires company to split the revenue into current revenue and future promises. So you have to estimate how much money you have to pay for future. If let's say all 100, mostly maybe only 50 is for this year. The rest of the 50 you need to pay for future. So you can recognize 50 as this year income. The balance of 50 will go in future to to offset the expenses in the future. You buy a car, the company give you 3-year guarantee, correct? But they don't charge you anything, right? So this guarantee is bundled into the car price, correct? So company may charge you $100,000, but and they are saying, okay, 90,000 is for car value, another 10,000 is the guarantee, 3 years guarantee or 4 years guarantee, which is free of cost. For that, company need to pay after 3 years, up to 3 years, right? They still need to have a staff, they still need to have maybe somebody, if let's say your car is actually damaged, they still need to pay for it, correct? So nowadays companies cannot recognize revenue upfront. That today we receive 100,000, so we receive 100,000. No, you have to split the revenue for future obligations, whatever you have to spend in future. Okay, so normally the equipment can have like, let's say for example you are buying a equipment, so you may have a equipment, you have an installation cost, you have post sale services, and you have material rights. So let's say you charge a contract price 40,000, the rest is all free. Installation is free, service is free, or there are some other benefits which are given out as a free. So the previously before this, the company need to recognize 40,000 as income. The rest all go as a cost because it's free. Correct? Now after the new accounting standard, companies are required to split the revenue into, okay, 19,000 for equipment, 10,000, 11,000 for installation, 4,800 for sales services, and 4,000 for other freebies. So the revenue is recognized when the items are either delivered or installed, or when the actual future sales service is done, or when the company has the person has claimed for the freebie discounts. So the company need to split the revenue into multiple parts. So we will not go into this detail, it's going to be very complicated for you. The last thing is in revenue is segmentation. So as I said, segmentation means understanding where your revenue come from. Who are your customers? So how we segment the revenue? How we segment the customers? Is there any criteria?
The amount of frequency we buy and the amount of money we spend.
Amount of?
Money we spend the service that we provide.
Yeah, you can say it like a paying capacity. So one customer may be a businessman. For example, I give you an example of hotel. Okay, there are many customers who go on internet and buy. Means they are paying a full price, right? There are customers who don't want to go internet and buy. They want to go to a travel agent and pay. So do you know the travel agent will pay the hotel maybe 20% or 30% of whatever you pay. So we give the margin of 30% to the travel agent. But he will not sell you cheaper than the online rate. But for us as a hotel, if you book directly, we get $100. If you book the same room via travel agent, we get only 60 or 70. If you are a company we are not selling at the online rate. We are selling at a different rate, have a contract rate, right? If you buy 10 rooms in a bulk, you are paying us much lesser than if you pay or individually, right? So for us, you are a different customer. So we want to understand how our business coming from. Our business coming directly, our business coming from travel agents, our business coming from the contract staff, or our business coming in the groups. So the revenue segmentation is normally done from the customer in the way of how we approach them, how do we market, so or how they book us, how they come to us. They can come us directly, they can come to us indirectly. Indirectly via travel agents, via corporate companies, via other companies, right? And the value proposition expected. So means one customer maybe require a suite, and another customer may stay in a deluxe room. One customer may require business class in the aeroplane. One customer is happy with the economy, right? The one customer may buy a full service. If you buy a ticket, do you buy a ticket which is able to change the price or which is not able to change the price? Oh, sorry, dates. If you buy a ticket online now and you search a ticket which is fixed dates, they will cost you very cheap because the dates are fixed. But if you want to buy a flexible ticket, you have to pay a higher amount, right? So they are two different, these are same person, same ticket, same plane, the different customers are two different because of their paying capacity. Somebody want to buy very cheap, somebody want to pay higher. So the person who want to sell cheap, company cannot have a different rates, right? They can have only one rate in the public. So they differentiate the rates by giving different options. Okay, if you want to buy cheaper, no problem, but you cannot change in the future. If you want to buy expensive, you can pay expensive, okay, pay full price, right? So it depends on the customer now and depends on their needs. So you can also segment your customers by charging different prices or offering different services, how they want to pay. So it depends on their willingness. So that's why we can say willingness to pay for goods and services. So these are the three criterias. But you don't need to have multiple segments. It doesn't mean that you will create 20 segments because you have 20 type of different customers. You need to categorize them to a maximum of maybe 5 to 6 segments maximum. Otherwise, you have 10, 20 different segments, means you need to have a 20 different focus on marketing and proposition, right? So which is not a good idea. So you need to keep your segments between 5 to 10 maximum, not more than that. Otherwise, it's too much details that your marketing team or yourself are not able to focus upon.